Congress just passed the big, beautiful bill. Everyone's wondering how it's going to affect cryptocurrency. In this video, we're going to dive into Arthur Hayes' opinions. He's an investment banker, crypto enthusiast with a master's degree in economics, the #1 skill set for cryptocurrency investing. Last cycle, nobody was paying attention to macroeconomics because the global economy was coming out of a 90-day lockdown. The feds and central banks across the world had everything on full blast. All you had to do was buy and hold back then. This cycle, it's a completely different market, even more so affected by the overprinting during the last cycle. Arthur Hayes, understanding macroeconomics, was able to sell this top in January. There's an ebook in the description showing real-time callouts. The rest of social media, completely disconnected from reality, believed that on both of these arrows, the altcoin market was going to continue to rip to the upside while I was selling my portfolio, getting into a cash position, waiting for swing lows to repurchase everything. And right now is our best possibility to break above this May 15th resistance. In the next 10 days, if we haven't challenged 900 billion in the altcoin market, we are going to be range bound into September at least. Connecting macroeconomics to crypto chart in June. Looking at Aerodrome. Each one of these arrows is a labor market print. We just had one on Thursday. Every time there's a labor market print and the price action is substantially below the 50-day moving average, Aerodrome has a massive rally. We are able to identify this simple, the basics of technical analysis with an understanding of macroeconomics. Back to the big, beautiful bill and how it's going to affect cryptocurrency. This is macroeconomic mechanics at work. In order for them to get the money, they do not just turn on the M2 supply. What they do is they create bonds and then sell those bonds to banks, VCs, institutional level investors for cash money. As they do this, they're going to be drawing liquidity out of the system right now. It's those banks, VCs, and institutional investors that are going to be putting up the cash for the budget expansion. They're the ones that would have been buying Bitcoin and cryptocurrency. So there's a temporary restriction on the supply of liquidity, which will later flip over as the money's being spent, then cause an expansion state. So Arthur Hayes is projecting a temporary dip as the Treasury General account that's very similar to the Fed's quantitative easing balance sheet. Notice how high up this spiked during lockdowns. Ever since then, they've been doing quantitative tightening, and recently they've been really slowing it down. This bull run will start to take legs, not based on rate cuts. We're likely to get one during 2025. It's going to be when they halt quantitative tightening, or if we get really lucky, they flip it back into quantitative easing. And it's when you find and track these signals that you'll be able to, just like myself and Arthur Hayes, identify market tops, which seem to be demystifying the world of crypto investors right now. It is a learning curve and it does take time. Right now, we found a project that's going to overpower macroeconomics. It's that bullish. Group members who got in on the early buy signals, they're already seeing 3, 4, 5x gains, and we're all in agreement after reading through the detailed reports. This is the early stages of growth. So cryptocurrency originally started rallying once they heard this bill was printed, as the current White House very bullish on cryptocurrency. Here's the issue on Thursday morning. They printed a labor market data, which was originally projected to be extremely bullish, and it flipped into bearish. Last month, it was 144 new jobs. They projected it would be 110. That's still strong labor force. You've heard Powell on the news saying the labor market is solid. This is canceling fears of a recession, which is part of the reason why the altcoin market is so oversold right now. Had we have gotten a print on Thursday morning showing a number around 110, it would have been off to the races. Here's the mechanics of what's happening behind the scenes. Whenever you see Bitcoin move, have you ever noticed that all the altcoins move at the exact same time? The labor market data came in super high, even though they were projecting it to come in much lower. In the DXY US dollar FX trading, everyone was short USD. This created a short squeeze. Now, the automated quant trading bots that control the market maker's position across the world, you see it when you log on to Coinbase. Your USD value is constantly fluctuating. Whenever the dollar moves this drastically, those quantified computers are constantly adjusting the trading pair value. Therefore, when you get this massive spike in the dollar, what you're going to see in Bitcoin, this is zoomed in to the 45-second window, is you're going to see this massive volatility as the quantifying computers start to rebalance. Ultimately, we saw a sell-off exactly like this during the last labor market print on June 6th. Let's zoom in a bit closer here. And it lasted until 2 p.m. Friday Pacific time. That's when the DXY closes. Now, the stock market will be closed on Friday because it's an American holiday, but the FX trading market, the US dollar, is still being swapped on exchanges. Check the total 3 chart at 2 p.m. Vegas time Friday and look for a rally to start forming, because that's exactly what happened during the last labor market print that also showed about 140,000 new jobs. We got all the way up to that May 15th resistance level that we retested at CPI. This is our best chance at breaking out of this range bound zone and starting to stack up price and altcoins for a larger breakout this fall. Traders are starting to recognize the 2025 bull run because of trade wars, because last cycle there was excessive economic stimulation during the lockdowns, that there will be a mitigated upside incoming. Projects like Render, in my opinion, will be fortunate to reach local all-time highs again during this fall. And that's across the majority of the top 100 projects. Some with extensive roadmaps ahead, they can see more upside, like Caspa. This project has a great roadmap. They're in the top 40 and they don't even have smart contracts yet. But for traders looking for those 25x, 50x, even 100x upside, it's AI agent sector that's the place to go. I'll leave a link to cookie.fun. This is a place where you can do research on your own on the total AI sector, right next to the free ebook with real-time callouts showing how to sell these market tops. Everybody who thinks that we're going to start doing 100x upside this fall, everybody who's been saying all you've got to do and buy and hold, is getting a major reality check. By the 13th and 14th of July, we've got CPI and PPI data. That's inflation. Inflation on May 15th is what started all this downside. The Fed is looking to change their overall policy, making it more strict. In the event we can't get back up and test the $900 billion market cap within 10 days, in my opinion, we're consolidating till September at least. To get a free copy of my opinion of the #1 AI project that's inside our VIP group, along with multiple different macroeconomic how the market work posts, As just like we're playing poker, we're waiting for clear-cut setups to open, like on, say, at 22 cents. If it's bullish at an FOMC meeting, it's going to be bullish at the FOMC minutes Wednesday the 9th. Thanks for checking out this video, guys. We'll catch you on the next one.